Good afternoon and welcome to BizTech's Asian Midday Market Watch. Phan Vee Leung, founder and CIO of Track Record Asia out of Singapore, is our guest today. V, welcome to the show.
Hey, it's good to talk about markets again.
Now, V, before we get your insights, let me take a look and see how regional markets are performing. And also, we start with crypto markets. Bitcoin is at 20,276. It's down 2.64%. Ethereum is at 1,507.73. It's down 3.51%. Now, across to regional equity markets, we start with Singapore, which is up sharply 1.86%. But that bucks the trend because the rest of the region is in the red. The KLCI out of Malaysia is down 0.12%. Shanghai is down 1.01%. The ASX All Ordinaries is down 1.01%. The Nikkei is down 0.63%. The Hang Seng is down 2.28%. And rounding up the numbers, we've got the Kospi, which is down 0.6%. V, it's pretty much a sea of red besides Singapore. Please tell us why.
Well, it's taking the lead from the US markets and also the weaker than expected earnings reports or forward guidance by the tech giants. So we have been receiving bad news on this front for the last few days. Google, Alphabet, Microsoft, Facebook, Meta, right? And most recently, earlier this morning was Amazon as well as Apple. So that is that's weighing on market sentiment, and as such, what you're seeing is, as you said, the sea of red.
Now, V, I want to zoom in on the Bank of Japan, and they basically came out today with unchanged policy stance. Unemployment in Japan also rose to 2.6% for the month of September, according to officials Japanese Statistics Bureau data. What's your view on Japan now and their policy stance?
Kuruda, the Bank of Japan governor, has pretty much said he's going to keep with his unlimited bond buying to keep bond yields capped, and there's no signs that he is in any way going to change his mind anytime soon. So that unlimited buying of Japanese government bonds will continue for as long as it takes to generate the inflation he requires to be sure that the inflation target will be met over the longer term. So I think we're going to see pretty much the same policies from them for as long as it takes in the foreseeable future.
So obviously this is policy divergence from the US, and the other country that has a policy divergence from the US and pretty much the rest of the world is China as well. How is this impacting the yen, obviously being driven to record low after record low?
So the yen is doing, as you said, obeying the fundamentals of monetary policies, where the most other major central banks are tightening policies. They're hiking interest rates. They are looking to control inflation, while the Bank of Japan is trying to generate even more inflation, and they are continuing to print unlimited amounts of yen to buy unlimited amounts of government bonds to keep interest rates low. So yen is just weakening on the back of that, and as it should continue over the longer run to remain weak and to get weaker as long as the other central banks continues to hike interest rates. But I think in the shorter term, we are seeing a pullback in dollar yen from the highs of nearly 152, because the intervention by the Ministry of Finance has been quite aggressive this time. And I think they're not concerned about levels. They're concerned about the volatility, about the weakening of the yen accelerating too quickly in a short period of time, and having speculators and investors all piling onto the same side of the trade. So they are trying to moderate their expectations, introduce a two-way risk into the market, increase volatility in the shorter run. And I believe may succeed for the for a short period of time. They may even push dollar yen below 140 if the dollar should retrace against other currencies as well.
Now, I want to then talk about the inflation data that's coming out of the US tonight. What are the signals that investors are looking out for?
Expectations for the PCE is for an annualized change of the 6.3%, showing that prices have risen yet again 6.3%, a high level relative to what the Fed wants. And it is the preferred measure of inflation for the US Federal Reserve. So I think it's quite critical again for the markets as to how this number turns out. If it should show that inflation is moderating at a faster pace than expected, so it comes in lower than expectations, it would be very good for risk assets, for stocks, and dollar would fall off from current levels, because the expectations now, we have seen a bit of a moderation in the aggressive interest rate hikes from Canada, and the expectations is also that the Fed may be just doing one more 75 basis points hike next week, and then start to talk about more two-way risk and allowing the lagged effects of their previous aggressive hikes to filter through to the economy. So, but it does hinge on tonight's number. If it should be disappointing in that it's higher than expected, I think we're going to see a bit of a risk aversion, stocks selling off, dollar strengthening, and interest rates rising higher.
Now, V, last question I've got to ask you is talk about Hong Kong legalizing cryptocurrency. Tell us about this.
I think this is a big deal, right? It's not getting a lot of press because it's crypto winter. Everybody is a little bit disheartened about this asset class, but Hong Kong, it is after all a gateway to China as well. China is very against crypto trading, but Hong Kong legalizing it is a sign that things may be changing. They could be experimenting with market developments in Hong Kong. They do not. I think the Chinese government are they are well aware that blockchain developments continue, and onboarding of new participants into this ecosystem continues unabated, although it's a bear market. Adoption continues. So they do want to compete as a financial center. They do need to develop this area, invite professionals to come build their ecosystems, build their platforms, and allowing access to the retail traders is a requirement in this for the longer run. In fact, I think if this does go well, it could be the trigger for the next bull run in the cryptocurrencies, right? It could be the end of winter if more participants. Of course, Hong Kong is a small group of consumers, but it is, after all, the gateway to China eventually.
Now, V, thank you very much for your insights, and thanks for coming on the show.
It's good to talk again. Cheers.
I'm Brian Fernandez, and we've been speaking to Phan Vee Leung, founder and CIO of Track Record Asia, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. Now, this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thank you very much for tuning in.